I want to talk to you about big tech earnings first. What we saw from Alphabet, strong earnings all across the board, growth in cloud, more adoption of its Gemini product. Do you think that's a big tailwind when it comes to big tech, or investors, perhaps seeing it priced to perfection and looking for any weak spots in upcoming reports?
I think this is really more of a tailwind, and it clearly shows us also that AI, it remains the big story, not only on stock markets, but really also for macro and economic growth in the years ahead.
Talking about this EU-U.S. trade deal and the potential for it to get done pretty soon, how important is that for U.S. equities to see that deal done? And the president talking about 15 to 50%. Is that a concern for investors that there could be some countries maybe that provide critical things to the U.S. that could see as tariffs as high as 50%?
I think 15 to 50 is still a big concern because there's a huge range of possibilities. And I think it also shows us that the uncertainty will remain in the market until August 1st. When you look at the EU-US potential deal, I think it's another example of that we really should double check headlines, because the headline was that the EU and the US would be closer to a deal. If you dig a little bit deeper, I think the story was rather that the EU hopes that it's going to get this 15% deal, and this would be the EU's last offer. So I think we're still far away from a deal. What does this mean then for US stock markets? It clearly means as long as we don't have a deal, as long as there is the tariff uncertainty out in the market, this will also weigh on US stock markets, because it still brings the risk that we could see much higher inflation going forward in the US, and hence also higher interest rates.
I want to ask you a question about these tariffs. The president actually and his administration going to court to see if they actually have the right to put these tariffs on countries. The sector tariffs, they fall under his purview, but the country ones seem to be at a point of somewhat debate. Is it priced into the market that these tariffs might be struck down by a court, but that process might take a while? Would that create volatility? Would that create a tailwind for equities? I mean, in your mind, what would that do?
In all honesty, Frank, I think that markets are currently asymmetric when it comes to trade. So they do not take into account any downside risks anymore. So they only take into account potential upside risks. So we see if there is a threat coming up, markets are not reacting. If there are signs of a potential deal or tariff rates being lower than previously penciled in, stock markets move up. So here we clearly see an asymmetric reaction by stock markets. And like you rightly said, everything that could still come from U.S. courts, and that could also add to volatility, to tariff escalation, in my view, is not properly priced in markets right now.
One other thing to touch on very quickly, we have the president going to the Federal Reserve. First time a U.S. president's done that in just about 20 years. Is there any market risk to that, the fact that the president's going there? I think the consensus is he's going there to pressure Jay Powell to lower rates.
Well, obviously, I think we don't have any day these days without some kind of pressure on Jerome Powell and the Fed. Also here, stock markets seem to have grown a bit numb on this entire story, but I think this story will continue. Does it mean that any firing of Jerome Powell is imminent? I doubt it. But I think the story that the U.S. president could try to get rid of the Fed chairman will stay in markets.